Joining us on the show, Amit Uplenchwar, the director at KPIL, is with us to talk to us about the way forward. Hi Amit, good to be speaking with you, and season's greetings to begin with. How are things at Kalpataru? How are things looking for the next Samvat?
Things are looking good, Anisha. But before that, also a very, very warm Dhanteras and a Diwali to you and all your viewers. Uh, we've had a good Q2 coming out of a sluggish Q1 because of elections and rains and so on and so forth, which is always a quiet quarter. And I think Q2 has been robust on all fronts. Whether it's revenue, whether it's margins, whether it's growth. So it's been a good set of Q2 for us, and the trend only looks better going forward as the main season kicks in from Q3.
Okay, things are looking on the up. So if I had to ask you that you had earlier when you started of the year talked about a 20% plus kind of top line growth, you seem to be on track given the fact that first half has been okay. You said Q1 was a bit weak, but Q2 made up for that.
So, Anisha, most of our businesses have, had a very healthy and robust performance in Q2, and it looks like it will follow through for the rest of the year. We've had one of our divisions which was a little slow, and the main reason for that was most of those projects, and primarily in our water division, our government projects in those 3-4 states where we had projects went through elections and some governments changed. So there was a slower allocation of capital for these projects, and hence there was a little, a slowish growth than what we had thought it would be. But for the rest of our transmission, our urban infra, our building and factories, our oil and gas and energy division are all showing 20-25% growth, even at H1 levels.
Sir, you also approved a fundraise of around 1,000 odd crore rupees that you will be doing via QIP. Any timelines you can share on the same, and what will be this funds used for?
So we've just had a approval to go for a QIP. It's premature, so we still don't know the timing of the QIP, the exact quantum and price, etc., which will be all done as per regulations and guidelines and through the due process. And you will know that in due course. And the only reason for the QIP is growth. We see a lot of business opportunities out there, in whether both in India and overseas across all our sectors. They need capex, and all of these for the growth. That's the primary reason for the QIP.
To say is that the company is not in dire needs of fund. It is just an enabling resolution. Also, if you could just tell us how's your debt looking like on the books?
So we always look at our net working capital days, and if you see quarter on quarter, that has already come down, and we are at 118 days as against 124 days in Q1 of this year. And typically we keep a metrics because we are across so many businesses and so many geographies with different payment terms, different contractual conditions, some capex heavy, some capex light businesses. Our objective is always to keep our net working capital days below 100 and our interest cost as a percentage of revenue more or less in the range of 2.1%. And so whilst Q1, Q2 is what it looks like, I think our target, what we mentioned at the beginning of the year, is to keep hopefully achieve that also towards the end.
Okay, fair enough. The other thing I wanted to get a better sense from you is regarding order intake, because this year what we have been hearing from economists is that the spend from the government has been slow, call it because of elections or whatnot, but even state as well as central spend has been on the lower side. In lieu of all of that, and the reason that the private capex hasn't really picked up in a big way, do you still anticipate order inflows to the tune of 22-23,000 odd crores? Which segments are driving growth for you?
So, Anisha, for after a long time, we've got our building and factories, our oil and gas, our transmission, domestic sector, all showing very good signs of current order booking as well as prospects in general, as already declared in the market. We are already sitting at 11,685 crores worth of order wins for the year, and we are approximately another 7,000 crores of L1. And whilst transmission and oil and gas have taken a chunk of it, and BNF, so these three sectors continue to show good promise, even going for the next couple of years. If you look at our overall order book, we are already at 60,000 plus crores, which gives us enough revenue visibility for the next 2 years. So we are not overtly worried about orders. And whilst there may have been a little slowdown, but I think Q3, Q4 is when the government as well as private activity always picks up in terms of capex.
Well, thank you, sir, for giving us all those details and for putting things into perspective.